Past picks from David Burrows. Now, November 25th of last year, you recommended Lockheed Martin. Defense companies for a couple of years now have been moving nicely. Are they moving well with the markets, or is there something very specific to, let's say, Lockheed Martin as to why they're moving well?
The reason that we bought Lockheed Martin originally was that we felt that we were near a secular trough in spending on defense. That was the first thing, and that likely spending would pick up. There were some new programs coming, including this new strike bomber. And then the second thing was that these are very domestically focused companies, and we wanted to focus on things that were more U.S. centric. And so of that group, we own Lockheed and continue to own it. We also bought Northrop Grumman along the way, which of course just won the bomber contract, $80 billion contract. And this group continues to behave well. These are real leaders within the group. And I would continue to buy both of them today.
Northrop is NOC. We'll have a look at this in just a second. Is there an ETF that you know of that holds a basket of these?
There is ITA, which is the aerospace ETF. It has a mix. It also has some airline exposure as well, but it's behaving pretty well. I don't own that ETF currently, though.
Okay, we'll have a graph here of Lockheed Martin versus Northrop. David mentioning that Northrop has won that big contract, $80 billion for a fighter program.
It's the long-range bomber program.
The F-35?
That's right.
Yeah. Next up here, Walmart stock's down. It's been struggling. David's long out of it. Remind us how and why you did this.
Well, so consumer has been really big exposure for us all year long, and the first key name for us in that group was Home Depot, which we continue to own as one of the 2 or 3 biggest holdings in the firm. But along the way, it became clear that secular growth is probably the most attractive characteristic in this market. Companies that can demonstrate they have some tailwind giving them a benefit over the rest. And so partway through the year, we talked about it before, we rotated to Amazon, and Amazon really took over that. And it's a striking difference. You know, Amazon's market cap today is more significant than Walmart's, and is growing at, mid 20% range. 28% is what they should grow this year. And they have their cloud-based business, which recent quarter grew 78%. So we think it's more attractive, and so we rotated our holdings there.
Did you have a broader idea as well with that there's a structural shift going on, so you'd rather be with the internet giant than the brick and mortar one?
Absolutely, but so the consumer focus comes from the broad win that the consumer in the U.S. gets from plentiful energy at low prices. And we see strength in travel and leisure, retail, but then of course there's a secular win in internet-based retail versus bricks and mortar. And then there's some companies that are just winning outright in that category, and Amazon fits all of those.
And I think we'll see this graphically represented in this next chart. Look at Amazon the last year, and look at what Walmart has done. That has been the place to be. You just bite the bullet with the premium you have to pay, and look at that. It's quite something, yeah?
Interesting that each of those significant jumps in Amazon shares came on their quarterly reports. So Amazon just continues to beat expectations, and sadly, on the other side, Walmart is not.
And I think we'll have a 5-year here before we move along to the other past pick made last November by David, which was Intel. And there it is, 5 years. Amazon going one way, Walmart heading the other, and that's quite something. So Intel, down 4%, you're out of it. So what happened here?
We have a pretty good semiconductor exposure. And just as an aside, the semiconductor sector is a sector that is always worth watching if you're wondering what's going on in the economy. It used to be we focused on lots of different industrial things, copper, one of them. But of course, chips are in everything. And so interestingly, if you look at September lows in semiconductors versus the August lows, much higher lows. And, Intel's had a great rally off those lows. But there are some more specific semiconductor stocks that have been behaving very well. NVIDIA is our biggest weighting in semiconductors, and it's basically hitting new highs.
All right, very good. NVIDIA's NVDA, and we might get some questions on some chip companies as we head along here. Half an hour to go with David Burrows. We'll get back to your questions after this.